Welcome everyone, this is Mike Hamilton for Trade Easy Way. Fantastic weather in the UK this weekend. So we had a glorious weekend, a lot of exercise. I didn't get much exercise last weekend because I spent 18 hours in the air flying down to Almaty, which I had a ball down there. I really enjoyed it. So look forward to going back to Almaty sometime to meet up with some new friends. But anyway, back to the markets. I've decided to start this video with the weekly chart of the Nasdaq because I think this is a leading indicator, and this is it has a new high in this range, and we look as if we are getting back to new all-time highs from autumn last year. So this bodes well. The markets are very, very strong. There's no indication of any selling whatsoever. It's a presidential year, so typically markets would tend to be bullish in a presidential year because the markets get optimistic with the idea of a new president that can inject new energy, new ideas, and therefore you tend to find the markets holding up. So if we look at the US dollar CAD, we have, let's look at this on the weekly chart first. We had a higher close, but we close into this area of resistance up here. The reason why I'm coming to the US dollar CAD is we have the major highlight of the news next week is the Fed on Wednesday. So 2 PM Eastern Time, 7 PM British Summer Time, we have Fed rates. Now the market is suggesting that we are not going to change rates. Now that's borne out by the fact we've not got a press conference. We've got a statement, we've got the rate itself, but we have no press conference. If we were going to have a press conference, it will be scheduled here for 7:45 or 2:45 Eastern Time, and it's not there. So the fact that we've not got a press conference, to me and to a lot of other people, is suggesting that they are not going to raise rates. So if they're not going to raise rates, where does that leave us? Well, we have a US dollar CAD daily. Actually, I'll show it on this white chart. This US dollar CAD daily is just knocking into this three-wave potential reversal pattern. We're closing above we closed above the 200 EMA on Friday. But the fact we are underneath this three-wave pattern, if we don't start closing higher, then I think we can expect to see some weakness in the dollar. This is the dollar index, the basket of currencies against the dollar, and we are again right up against this daily channel with the low. I've copied that channel and dropped it to the May 16 lows to suggest that this could break down and give us a funnel pattern that could be potentially quite hard. If we can close underneath this level here, it could come down quite hard and fast to this level here, at which point I think there's a potential for them to raise rates in September. So if I then highlight this range from this low in December last year, I think we could come down to this 96 level, hold, and then potentially break up. Now that will give us a 1, 2, 3, 4, 5 wave pattern into these highs. Okay, this is all predictions, so we've got to wait and see what the market does, particularly on Monday and Tuesday. Of course, the close on Wednesday is going to be crucial. Okay, so let's put that into practice now and look at the euro. The euro is right on this trend line support. Actually, that's not drawn very well. So let me just draw that slightly better. I do not like trend lines that are sloppy. Right, so I picked the low of December 3 and the Brexit low of 24th post-Brexit low 24th, and we are right on the line here. I did try a swing trade long on the euro here. We knocked into that resistance, and then here we are back down here again. So we are 1, 2, 3, 4 waves down here. So if we hold, we can potentially get a wave 5 up. We are clearly in a downtrend. The fact we are getting, in fact we come off here, couldn't break close above there, couldn't break above there, but I just think we're in an area here where we could chop around a bit, and then so if we come back down again, push into resistance, come back down. I don't think this will hold, but I'm talking about days, you know, later in the summer, not now. Okay, so let's go to the weekly on this. Sorry I'm jumping around a bit, I should stay on this. Weekly, we are just clinging on, just. Okay, so one of the most interesting charts I think that's out there is, I think this pound yen is overdone. We were very flat on the, we were flat last week. Now, last weekend I was looking for this to dip first into this 13500 level. We didn't get that, we held up. So I'd love to see some lower figures in the early part of the week. See if I can pick up some support levels here, and then I think we should be getting back to this level, at which point we're going to need a lot of good UK data for this to break through it. Data last week was weak, but we've still got a lot more to get through. Okay, so I would watch to see if we get a pullback to say 135, so 400 pips lower than this, and then see if we can get back to some Brexit highs. Okay, so I'm going to wait, be patient, see how that pans out, see what happens on Monday, stay out of the markets on Monday, and then see what that's going to give us. You can see on this 4-hour chart we have the 50 and the 200 EMA are closing in. So it doesn't matter what indicators you use, but this is closing in on this chart. Right on the line with this one. So if we get a dip into 138, for example, and we hold, that might push back to resistance. We might flap around here to Wednesday and then break one way or the other. So I tend to use my 4-hour for chart patterns and my 3-hour for fibs. If you look at my 3-hour pound yen for fibs, you can see that I'm interested in this 135 level, 134.50, to see if that can hold and then push higher. So we're now getting the drop. This is the level I was hoping for in the first half of last week. In the end, we got it on the second half of last week. Alright, so I think this pound yen is due a push higher. I'll put that back to my 3-hour chart that I normally have it on. Okay. I'm looking at the Aussie pairs. I think the Aussie, this weekly chart on the Aussie, Euro Aussie, sorry, we're close above the 200 EMA on this. So I'm just looking to see if we can start to see that support holds in there and keeps going. I think we could push up into that and get back to some of these highs. I think there's some Aussie rates this week, isn't there? Core price inflation on Wednesday, which is looking for a higher number on the Aussie. No. We've got Japanese Outlook monetary policy statement on Friday morning before we get to our desks on Friday. So that's going to be very interesting. And look at this, advanced GDP for the US on Friday is looking at 2.6, with last month's revised up to 1.1. So that's why these markets are holding up so well. Okay, so that's that. Quick look at oil. I think oil could, if I'm right about the dollar, we are sitting on this 43.80. It's lower, but it's right on the line here, because from the support in January 2015, March 2015, we had a push up here in September last year, and we pushed up here from April this year. Wave count wise on this weekly chart, and 1, 2, 3, 4. So wave 5 could take us back into the 50 area if we get it. But bear in mind that is a sell signal last week, following on from the sell signal we got on the 6th of June, the week of the 6th of June. Okay, so bearish close on Friday, getting close to the bottom of the channel, but with the potential for that to hold up. You look at this on a 4-hour chart. If I drop this on it, you can see how the 50% is hot. This is 50%, this dotted line. We held on Friday, so we've got to start closing above 45 if this is going to work, and we are only 70 points underneath that level with a buy signal on this 4-hour chart on the Friday close. So it looks to me as if we could have had some buyers holding on to contracts late Friday into the weekend. So time will tell. Price action Monday could determine that. Gold, lower close. We come back into under this channel. So we've peaked out of this channel, come back into it. If we break what I suspect we might do is this, I think. So we've had 1, 2, 3, 4, 5. We're into an A wave correction. If we do a B and a C down to the support, I would look to buy at 12.75. That's the area where I'd look to take a long position on. Okay, join me at Traders Roundtable on Monday, 7 PM British Summer Time, 2 PM Eastern Time, and we would do an in-depth analysis of a very quick analysis of the dollar and the yen, and then move quickly on to some stock sectors. So make sure you join me for that. The reason why this video is on my YouTube channel is because my website is currently down. The new one was supposed to be up on the end of Friday, and that didn't happen. We had 1 or 2 minor problems, so I'm hoping that's going to be fixed very early on Monday, so I can get going my new website. I'm really excited about that, because that is going to launch the new era of the whole membership service and the whole foundation of Trade the Easy Way, as we unravel a new level of service for this. Alright, thank you very much for joining me, and look forward to seeing it. I will open the room at 11 o'clock UK time tomorrow, and we'll see where we are. Thank you very much. Bye for now.